afternoon, everyone, and happy Wednesday. Welcome to Stock Market Today. Ali Corman, Justin Nielsen here with a breakdown of the action in today's session, where it was a very ugly day and things got kind of bad midday and continued to get worse with a pretty ugly close out there, Justin.
Yeah, it just really kind of goes to show you it's not how you start, it's how you finish. And this was not a good finish. But we'll go ahead and take a look at some of the stocks that were moving today, starting with Ambarella. We'll also keep with the chip theme and talk about United Microelectronics that we were talking about on IBD Live today. And then just to kind of mix it up a little bit, let's throw a home builder in there with Lennar.
All right, why not? Well, let's check in on the major indexes, some analysis for you here. So even in the early going today, Justin, you weren't too wild about the prospect of a bounce here because of the heightened volatility. This is a very headline-driven market right now, and today's action just proved that even more.
Yeah, and this is where you have to be very careful, because if you're trying to play it too cute, you may start getting aggressive because it's like, oh, look, things are up and I'm missing out. But then again, what happens a lot of times is you find that you just wait a little bit and things are right back down, and even worse than where you started. So it can be very tricky. It can be very easy to be buying at highs and selling at lows, which is not what you want to be doing. So right now, the Nasdaq Composite, we're back below that 21-day moving average line. We did that yesterday. So Monday we were talking a little bit about how the breadth was lacking in this market, and that continues to be the case. Decliners were well above the advances today, and it just goes to show you that right now it looks like we are actually hitting resistance pretty consistently at that 10-day moving average line. That's the pink line on your chart right now. But just to kind of give you a sense of how bad it was, I mean, you talked about the Nasdaq being down 1.8%. At its high, it was up 1.8%. So we're talking about a big shift, intraday here, from the highs to the lows. And that's something that we've really been seeing in the indexes since November 22nd. I mentioned on the show, the IBD Live show this morning, we've had consistent, above average, above the 50-day average of the trading range since November 22nd every day.
Right. And Justin, it looks like this chart isn't even showing the worst of it. By my calculations, it looks like the NASDAQ closed at 15,254.05. Our 50-day line is at 15,269.28. So the NASDAQ closing below the 50-day line today, it looks like.
Yeah, so that's it's one of those things where a lot of times when we talk about a close below that line, we do want to kind of see a decisive close. We don't want it to be one of those things where we actually have to look at the number, and it's not quite apparent on the chart. So at this point, I would say, look, we're right at the 50-day line. But the fact that we've lost so much ground, that we're down to that level. Now, this is a level where it's going to be important. Can we get support? That's going to be a critical question that we're going to need to get answered. But there's so many questions out there with Omicron and the variant, and even with what's going on with the Treasury yields. I mean, we were talking today about how the yield curve, it's not so much about the 10-year Treasury yield, what's happening there, but it's also what's happening in relation to the 2-year Treasury. So sometimes energy and financial was looking really strong this morning, but as that yield kind of flattens out, it can be really tough on financials.
Right. Another added element there. So the NASDAQ with a decline of 1.8% today, the Russell down 1.9%. We also had the Dow down about 1.3%, the S&P 500 down 1.2%. So we'll just take a quick look at the S&P coming down to its 50-day line as well. So we definitely seem like we're at a key juncture here.
Yeah, and this one again was up 1.9% intraday. Here we are, resistance at the 10-day moving average line. Actually, you could, even consider this maybe getting resistance at the 21-day moving average line. So if we see this continue to trend below those moving average lines, that's something that we're just going to have to be very wary of. And then the Russell 2000, we talked about how this has been lagging for a while. It was one of those things that it was looking strong, but then when it rolled over, it kind of was a foreshadowing of what was to come. And that one was up 2.5% intraday, and a big heavy hit there as well.
Okay. And a quick check on growth stocks. So underperforming, down about 1.8% today, it looks like. So we're continuing to see the indexes mask the even more weakness that we're seeing underneath the surface. So FFTY showing that here as well. But maybe a couple of bright spots we'll have to see. I mean, Ambarella had a strong earnings report today, but it only closed up 14% after being up much more earlier on in the day.
Yeah, it was up almost 27% as we were talking about this during IBD Live. And here again, you got to just kind of keep in mind, what kind of market environment are you in? One of the things I was, saying to myself and to the crowd was, look, I don't know that you want to be super aggressive right here. Buying Ambarella at this point would be aggressive because you have to look at it as, where would you be putting your stop? At the time that we were seeing it up 27%, your stop, if you would use the low of the day, that was even a 10% drop. And if you were looking at the 50-day moving average line, well, you were 29% above the 50-day moving average line
Right.
as it moved to its highs. So that is one of the things where I was liking the setup here. I was really interested to see how it reacted to earnings. I was hoping for an entry, but it was almost a little bit too strong in this case. And when I say too strong, it was just because it was going to be difficult on where would I set my stop. Because it's always important that you have your exit strategy, kind of get a sense of what would be a normal pullback. So at this point, I'd be waiting for this to, maybe flatten out for a little bit, go sideways, even maybe pull back a little before I would be interested in it. Now, one of the other things we did talk about this morning was, hey, if you were holding on to this from before, maybe the last earnings report when it broke out, you're in a very different position. You can give it that room. You had the option of maybe either selling into the strength because again, it's a weaker market, so maybe you take your profits while you've got them, or if you've got the long-term conviction in this, they've got a lot of exciting things going because of their work with cameras. This is one where you've got a lot of cushion, and so you can ride out some of this volatility for now.
Okay, well, elsewhere in the chip group, let's take a look at UMC. This is in the semiconductor manufacturing group. It broke out today, ended up with a gain of about 5%, so off of its highs as well. But yet another sign of some strength, it seems, in the chip sector compared with the rest of the market.
Yeah, so if you go through the chip sector, there were certainly a lot of things that were off their highs, but they were still up pretty significantly. And so one of the reasons I just wanted to bring this one up is because it wasn't on my radar at all. You threw the question to me this morning, and I'm like, what? Where did this come from? It's a lower price stock. And so a lot of my screens have a minimum price level of $12. And so I missed this one. And it just reminded me of one of the stocks that I almost missed back in 2012. It was InvenSense. And the reason why I caught it was because of leaderboard. And I've got to give kudos to David Chung, our hat man, who he's been writing about some of these low price stocks that have good composite ratings. And this one definitely had the liquidity. So it's, sometimes it's okay to be looking at some of those lower price stocks as long as they have that liquidity. And this one definitely fit the bill in that regard. So I'm going to be kicking the tires myself on this because, look, there's, even though it did close off its highs, this was still a pretty strong breakout and it did hold a lot of gains, still up 5% for the day.
Mm-hmm. Okay, well, let's check in on Lennar, a home builder, up about 3% today, closed below its 21-day line in Tuesday's session as it was pulling back after a breakout of a cup with handle of its own not all too long ago. So holding up pretty well, all things considered.
Yeah, so this is, kind of if you're looking at potential areas that may be setting up where some rotation may be happening, the home builders is something that's caught my eye. I would have preferred if there was a little bit more strength and well, I guess volume behind the move that it had as it broke out. But what you have here is you had a strong move. It just got out of that buy zone. That's that blue shaded area that we have on pattern recognition in Market Smith. Then it pulled back, but it got support right there at the top of that buy point area. And so that's kind of a nice place to get that support. Now, this is a very big difference from some of these high flying stocks where we've seen like let's just look at snow, for instance, where we had this huge gain on it and it reversed all of the gains from its breakout. Upstart did a very similar thing. So there's a lot of these stocks that were the high flyers that really kind of broke down and lost all of the gains. That's very different from Lennar, where you had this small gain. You're just kind of testing the area of support, and this could potentially get higher. Now, one of the things I like to do is step back and take a look at the weekly chart. And if you look at the weekly chart, you can see, look, the relative strength line isn't as strong on this one, but that's because it's been flattened out for quite a while here while the market was rising. And so that's one where if it can maybe continue to show strength, continue to hold up, you're going to see that relative strength line improve.
Mhm.
And again, if there's a rotation here, you might see some strength return to this sector.
All right. Thank you, Justin. Well, there's a lot of ugly action out there right now, but IBD is there to guide you. Not only do we have our podcast coming up, Justin, I know you're going to jump on over to that here shortly. That's coming out tomorrow, investors.com/podcast. But we also have another episode of IBD Live for you tomorrow morning. So there, once again, will be plenty to discuss. Isn't that right?
Absolutely. And, I'm really excited to talk to John Najarian because with this extra volatility, that does set up some opportunities for option players. And he's one of the best. So I'll be definitely picking his brain on what kind of things he's looking at. Arush and I will do that together.
Yes, good stuff. Looking forward to that. So we'll keep an ear out for the podcast episode to drop tomorrow. And make sure you also go to investors.com/IBD Live for more details on our daily morning live stream. We'll see you there, everyone. And we'll see you right back here tomorrow after the close.